A very good afternoon to you, and thanks for having me.
So, what do you believe, Idris, to be the primary drivers of this jump in interest income in the first half of 2025 by these banks?
I think before we go to that, let's go on to a bit of a trajectory, the history line. Over the years, in the last, 25, 30, or even longer years, Nigerian banks are known to have always been earning significantly high interest rate or incomes that they earn from operations. So much so that the Federal Republic of Nigeria at one time did introduce what is called a super tax profit. So in addition to company income tax, an additional, tax is being levied on banks because of the excessive, profitability of operating in Nigeria. However, while it is indeed the fact of the matter that about $20 billion has been earned by these banks, while in the last couple of years when I was in the banking industry, one can say clearly, yes, the profitability is high, but when you look at the other side of the income statement, that is the expenditure, Nigerian banks do pay enormously trying to sustain their operations. Electricity is in short supply. We are in a kind of a situation. The interest rate, yes, is high. However, the delinquency on as far as the risk assets are concerned, meaning bad debts that these banks need to cover, is also usually very high. So by the time you juxtapose the cost of operation vis-a-vis the delinquent debts, you realize that such profitability is nothing to write home about, because you will see that even in the payment of dividend, these banks aren't paying as much as the way and manner we see them earning these huge profitabilities.
Right. So, Shabu, how sustainable is this increase going forward? And this is especially in the context of anticipated interest rate cuts. And what would be the scenario if earnings for the banking sector continue to come down?
Well, if you look at the interest regime in Nigeria in the last, say, 24 months or maybe slightly longer, you realize that inflation has been fairly high. We are recording a period of 36% inflation. And at the same time, interest rate, of course, naturally will be high because the regulator, the monetary policy regulator is trying to make sure that we sustain a real interest rate as opposed to a negative interest rate regime. But right now, we are having a bit of a nosedive. Glory be to God, due to the efforts of the government, that inflation is coming down. So obviously, interest rate will also head south, meaning it will come down. Now, is the ability to generate 19 billion over the next 3, 4 years annually sustainable? I think the answer is yes, largely because while interest rate may come down, correspondingly, the risk asset position of this bank will increase. So the banks will naturally work assiduously trying to make sure that their revenues does not come down, and to make sure that they have a sustainability kind of regime.
Right.
Remember, we are witnessing an era of capital increases as ordered by the industry regulator, the Central Bank of Nigeria. So these banks will naturally work even harder to make sure that this interest income is not only sustainable, but is maintained, because they have to service their shareholders, increased number of shareholders, and the return on investment has to be sustained. So it is likely going to be sustainable.
All right. Thank you very much, Shuaibu Idris, Economist and Managing Director at Timeline Consult Limited. Thank you very much for your time, sir.
Thank you for having me. Thank you.
Thank you, sir. I mean, it's really worth noting as well that Moody's has also reacted to this. And what they've said is they've warned that the recent central bank rate cut could impact future profitability unless loan volumes rise. So that is a warning as well that's worthy of mentioning as we speak about the issue of interest rates in Nigeria. It is 33 minutes after 4 p.m. Central African time. Let's take you now to the markets desk where Chanduko Ligege is standing by with your latest market indicators.